Michael McNamara of Mastercard Advisors. We're talking about the holiday shopping season and retailers. And Michael, one area we haven't addressed is apparel. It was kind of weak in the beginning of the holiday shopping season, but appeared to make up for some lost ground towards the end. Are we looking at positive growth?
Well, overall apparel is actually a slight negative when you go back and you include November. December, but when you isolate December, it was positive.
So less bad either way.
Yeah, less bad. I mean, stable is probably the best way to describe that. Men's apparel did do a little bit better. It was up over 3%. Footwear did relatively well. Apparently, a lot of people had to buy boots for all the snow, so footwear did relatively well in terms of those categories. But stability is probably more the best way to describe the apparel sector right now.
What about women's apparel?
Women's apparel has struggled a bit consistently ever since we saw things slow down last year in the fourth quarter. Women's apparel has consistently trailed men's and footwear. Footwear might have been taking some of the women's apparel number away from women's, but overall that's been something that anywhere from 5 to 10% in terms of percentage points and growth rates, women's has been trailing.
Why the disparity? Is it shopping habits, pricing, selection? Or just the fact that women do most of the shopping?
Well, it's getting into a little bit of speculation here, but in some respects, the women's sector is much larger, so there's a little bit more to cut in terms of spending, and it tends to be a little bit more fashionable. Whereas, I buy my suit and this is my suit. The women's category tends to be has a little bit more turnover.
Okay, gotcha. What about electronics? We know that there was a big. They had big numbers, posted big numbers on Black Friday. Did that keep up the pace afterwards, or did they kind of slow down a little bit?
When you think about the electronics category, it tends to be a little bit more early season biased. Key thing there is that inventories, a lot of the hot products in this season and the last couple of seasons have really been electronics based, and folks are worried that they really have to hit that early, or the products might not be there. So that's tends to have an early season surge. In terms of that particular sector, though, the Super Saturday storm impacted that sector. We saw sales down nationally 7% on Super Saturday year over year. It was made up on the Friday before the storm. Sales were up quite a bit, and then on the 22nd and 23rd, sales were up quite a bit as well.
Okay, Michael. So bottom line, what do all the numbers tell you about the health of the consumer heading into the new year?
Well, the health of the consumer, shopping seemed to be more deliberate this year. And in terms of the overall season, even though the numbers might not be huge in terms of growth rates, it's a much healthier season with the inventory situation being more aligned with consumer demand. Now, as we go forward, this year is much different than last year, where there were bloated inventories. The country's going to have to replenish its inventories. That could have positive ripple effects throughout the economy. And also the retailers in much better condition this year. So hopefully you won't have the series of layoffs that had to occur last year.
Right, the emergency measures, basically.
Yes.
So stability is still the name of the game here.
Yeah, stability. Last year, think of it, last year we were in free fall. This year, more of a stable environment. Or last year we were in critical condition. This year we're in stable condition.
All right, better than critical, certainly.
Yes.
Thank you so much.
Thank you.
We've been speaking with Michael McNamara of Mastercard Advisors.